You know, there's one rule in trading that stands above all the rest. One rule that separates the speculator who survives from the one who disappears. And that's what I want to talk to you about today, the 51 trading rule you must follow. Before we dive in, let me remind you, this ties directly to what we talked about in the previous video on no indicators. No stress, just profits. Because that idea wasn't just about simplicity, it was about discipline. And discipline is the root of every trading law worth following. Now listen carefully. The number one rule, the rule that's been written in my blood and paid for in my own mistakes, is simple: always protect your capital. That's it. Not a fancy rule, not one wrapped in mystery, but it's the backbone of every great fortune made in the markets. You can lose opportunities and still survive, but once you lose your capital, you're finished. The game's over. Have you ever noticed how easy it is to get excited after a winning streak? How your confidence starts whispering that maybe this time you've got it all figured out? That's when traders forget the rule. They start trading big, taking wild shots, ignoring stops. And that's when the market reminds them, painfully, that it doesn't care how confident you feel. You see, the market's a patient teacher. It doesn't punish you for being wrong. It punishes you for staying wrong. And that's where most traders fail. They can't let go of a losing position because they take it personally. But a trader's job isn't to be right. It's to survive long enough to be profitable. Tell me, would you rather be right or rich? Because the two rarely come together in this game. Now, let's make this clear. Protecting your capital doesn't mean never taking risks. It means taking the right risks. You must learn to trade only when the odds are in your favor, not because you feel good about a setup, not because you heard a tip, but because your chart, your own judgment, tells you it's time. When a stock starts to act right, when it breaks out with volume, when it moves like it's got purpose, that's when you take your shot. But even then, your first duty is defense. You set your stop. You honor it. No exceptions. How many times have you moved a stop because you knew the market would come back? How many times did it actually come back? You see, that's the emotional tax traders pay before they learn this rule. The market will always tempt you to bend your own principles. It whispers, just one more day, just one more tick. But the moment you break your own rules, the market owns you. Trading isn't about predicting, it's about reacting. That's something most people never understand. The best traders don't try to outguess the market, they simply align with it. The chart shows you the truth if you know how to read it. A clean move, a volume surge, a strong trend. These things tell you more than any indicator ever will. And that brings us back to that earlier idea from no indicators. No stress, just profits. Remember, we talked about keeping your chart simple, letting price action speak for itself. This rule, protecting your capital, lives right inside that philosophy. The simpler your method, the easier it is to see when you're wrong, and the quicker you can cut the loss. You can't build wealth in this business by swinging at every pitch. You have to wait for the fat pitch, the one that's right in your zone. But even then, you swing with control. Most traders lose because they can't sit still. They confuse activity with progress. The tape starts to move, and they think they have to do something. But the best trades I ever made were the ones I waited for. Days, weeks sometimes, until the market itself confirmed my view. That's patience, and patience protects your capital more than any stop loss ever will. Do you know why the market always wins in the end? Because it can wait longer than you can. The market doesn't care about your emotions, your hopes, your analysis. It only rewards alignment, when your position is in harmony with the major trend. And to stay in that harmony, you must have capital. You must have the ammunition to act when the time is right. Lose that, and you lose your freedom as a trader. There's another side to this rule, though. Protecting your capital also means protecting your mental capital. You can't think clearly if you're trading scared. You can't make sound judgments if your last loss is still echoing in your head. The market demands a cool mind, so part of the rule is knowing when to stop trading for the day. when to walk away and let the dust settle. Because the toughest battles aren't always on the chart. They're inside your own head. When I was starting out, I thought the goal was to make money every day. But the market doesn't pay that way. It pays in chunks, irregularly, on its own schedule. Some of my biggest profits came after weeks of waiting. The discipline to protect my capital during those waiting periods was what made those big wins possible. Have you ever missed a great move because you blew your account on a string of small losses? That's the penalty for breaking the rule. Let me tell you something that every trader eventually learns the hard way. The market's not your enemy. Your lack of discipline is. Your greed, your fear, your impatience. Those are the real adversaries. The market is neutral. It just reflects what's happening. The price doesn't lie. If a stock's going down and you're still holding, that's not the market betraying you. That's you betraying your own rule. You've got to learn to stand aside when the market's not clear. There's no shame in sitting out. In fact, that's often when you show the most strength as a trader. Doing nothing can be the hardest move of all. But that's the kind of decision that keeps you alive in this business. Remember this, there will always be another trade, another setup, another opportunity. The market isn't going anywhere. Your only job is to be ready when that next move comes. And you can't do that if you've lost your capital chasing noise. The traders who last, the ones who build real wealth, are the ones who treat every dollar as a soldier. You send them into battle only when the odds are right. You never waste them on hope, and so the 81 rule, protect your capital, isn't just about money. It's about respect. Respect for the market, respect for your craft, and respect for yourself. Because when you learn to defend what you have, the market eventually rewards you with more. And if you remember what we talked about before, that trading without indicators means trusting price and patience, then you already understand how this rule ties in. Simplicity, discipline, and capital preservation all walk hand in hand. Trade only when the odds are clearly in your favor. That's a principle carved into every successful trader's foundation. It's not a phrase you memorize, it's a truth you feel after you've been burned by the market enough times. Because the market has a way of teaching lessons that no book or seminar ever could. You see, most traders lose not because they don't know how to read charts, but because they can't wait for the right moment. They trade out of boredom, out of excitement, out of the need to do something. But trading isn't about movement. It's about precision. Ask yourself this, would you take a bet in a casino if you knew the odds were against you? Of course not. Yet traders do it every day in the market. They jump in without confirmation, without strength, without momentum on their side. The professional waits. He watches. He studies how the stock behaves, how it responds to pressure, how it reacts near key levels. Only when the price starts to prove itself does he act. That's the difference between speculation and gambling. One studies probability, the other worships hope. When you trade only when the odds favor you, you're not trying to outguess the market. You're aligning yourself with it. The tape always tells the truth if you know how to read it. The trend is either up, down, or sideways. There's nothing mystical about it, but most traders want to buy bottoms and sell tops, chasing perfection instead of probability. I've never met a trader who made money guessing tops and bottoms for long. The big money is made in the middle of the move, when direction is clear and the odds are stacked on your side. You can't force the market to give you a setup. You can only take what it offers. That's why patience is more valuable than any indicator or tool. The waiting, the silence, the watching, that's where a trader earns his edge. Have you ever noticed how the market seems to reward those who do less but do it better? It's because they act only when the odds line up. They're not looking for constant action, they're looking for high probability action. To understand when the odds are in your favor, you've got to know what strength looks like. A stock in an uptrend doesn't rise smoothly. It advances, pulls back, then advances again. Each pullback tests the conviction of traders. If it holds strong near its previous highs and pushes up again with volume, That's the market telling you the odds are turning your way. But if the rally is weak, volume dries up, and the price hesitates, that's not a setup. That's a trap. The same goes for shorting. Traders love to bet against strength, thinking they've found the top. But the market isn't kind to ego. If you're shorting into strength, you're standing in front of a moving train. You might be right eventually, but can you survive until, eventually, arrives? The odds aren't on your side when you trade against momentum. You want to trade with the move, not against it. Let the market confirm your opinion before you act on it. Now, this doesn't mean you wait for perfection. There's no such thing. What you're looking for is alignment, price action, volume, and trend direction all telling the same story. When these three speak in unison, that's when probability tilts your way. It's like the wind at your back. It doesn't guarantee victory, but it makes the journey smoother. In the previous video on no indicators, no stress, just profits, we talked about reading the chart like a story, letting price be your only guide. That same simplicity applies here. When you strip away the noise and focus on price behavior, it becomes easier to spot when the market is tipping the scales in your favor. You don't need 10 screens of indicators to tell you that. All you need is a trained eye, steady nerves, and the willingness to wait. Every trade you take without the odds on your side costs you more than just money. It costs you focus, confidence, and emotional balance. Each bad trade chips away at your discipline until you start reacting instead of planning. But when you commit to trading only the setups where the odds are clear, you trade less and win more. You conserve energy, capital, and clarity. The three things most traders waste first. You see, the odds don't care about your opinions. The market doesn't care about your feelings. It rewards structure and punishes impulse. That's why trading without patience is like sailing without a compass. You might move fast, but you won't know where you're going. And when a storm hits, you'll capsize before you even realize what happened. How do you know when the odds are really in your favor? Look for strength backed by behavior. When a stock moves higher after breaking a key level and does so with conviction, strong volume, clean follow-through, and minimal hesitation, the crowd is behind it. The tide is moving. That's when you step in. Not before, not on a hunch, but when the move confirms itself. One of the hardest lessons for traders to learn is that doing nothing is part of the job. Sitting on your hands while the market moves without you takes strength. But every day you don't trade a low probability setup. You're protecting your capital and waiting for a better one. The amateurs think missing a move is failure. The professionals know missing a bad move is survival. Sometimes you'll wait days for the market to give you the right signal. And when it comes, it'll feel obvious. So obvious that you'll wonder how you ever used to trade differently. That's the beauty of trading with probability. The setups that work best don't require convincing, they just make sense. You'll feel calm, not excited. And that calmness, that quiet certainty, that's the sign you're in alignment with the market, not fighting against it. The irony of trading is that the more you wait for clear odds, the fewer mistakes you make. And the fewer mistakes you make, the faster you grow. The path to consistent profits isn't built on constant trades, it's built on selective ones. You don't need 20 trades a week to make money. You just need a few good ones with the odds clearly in your favor. So every time you feel the itch to trade just because the market's moving, stop and ask yourself, are the odds with me, or am I just looking for excitement? Because in this game, excitement is expensive. Patience, on the other hand, pays its dividends in silence. Doing nothing is often the most profitable move. A truth every great trader learns, though most learn it the hard way. The market has a way of making you believe you must always be in motion, that opportunity disappears if you're not constantly taking trades. But the market doesn't reward action, it rewards accuracy. Most of the time, the real profit comes not from what you do, but from what you don't do. It's in the restraint, the patience, the waiting. That's where the professional earns his edge. You see, trading is a strange business. The moment you sit down in front of that screen, Every tick seems to demand a response. Prices move, candles form, volume flashes, and your instincts scream that you must act. But that's the very instinct that ruins most traders. The market thrives on emotion, and when you trade from impulse, you're handing it your money gift wrapped. Have you ever noticed how easy it is to overtrade after a win? You feel confident, energized, almost invincible. And that's when you start forcing trades. Or after a loss, when you just want to make it back quickly, that's when you press too hard. Both times, the result is the same. The market humbles you. Every trader starts out thinking success means constant action, but the more experienced you become, the quieter your approach gets. The veteran trader waits like a hunter. He studies the chart, reads the tape, and does nothing until the market confirms his setup. He doesn't chase noise. He doesn't panic when he's flat. Because he knows that doing nothing is doing something. It's protecting his capital and preserving his focus. Ask yourself this. How many trades have you taken simply because you were bored? How many times have you entered a position, not because the market showed strength or weakness, but because you just wanted to feel involved? Every trade has been there. It feels harmless in the moment, but boredom trades are some of the most expensive lessons you'll ever buy. The professionals sit through boredom, the amateurs pay for it. The secret behind doing nothing lies in understanding that the market spends most of its time in noise, real opportunities, clean directional moves where risk and reward align are rare. The rest of the time, price drifts sideways, fakes breakouts, or chops traders to pieces. The traders who can sit through that noise and wait for clarity are the ones who last. Because each unnecessary trade not only costs you money, but also weakens your discipline. And once your discipline cracks, the market doesn't need to do much to finish the job. You remember in the previous video, no indicators, no stress, just profits. We talked about simplifying your approach, about letting the chart speak without clutter. This idea of doing nothing fits perfectly into that philosophy. A clean chart tells you when there's nothing to do. And that's just as valuable as knowing when to act. When price isn't trending, when the setup isn't clear, when volume dries up, that's the market telling you to stay still, and the smart trader listens. Doing nothing doesn't mean being passive. It means being selective. It means recognizing that capital is your ammunition and that every trade you take should have purpose. The act of waiting is strategic. It's what allows you to be fully ready when the real opportunity appears. Think of it like drawing a bow. The longer you hold steady, the more power your shot will have when it's finally time to release. Impulsive traders keep firing arrows into the dark. Disciplined traders wait until they see the target. The hardest part of this business is that the best move often feels like inaction. It goes against human nature. Our minds crave stimulation, confirmation, results, but the market rewards the opposite. Patience, calmness, detachment. Most traders blow up their accounts not because they lack knowledge, because they can't sit still. They measure progress by how many trades they take, instead of how many they avoid. The market doesn't pay by the hour. It pays by the opportunity. Doing nothing also keeps your emotions in check. Each trade you take carries a psychological cost. Stress, excitement, fear, hope. The more trades you force, the heavier that burden becomes. Eventually, you stop thinking clearly. You react instead of reason. But when you step back, when you wait, when you let the market come to you, your mind stays sharp. You see the structure, the rhythm, the story behind the candles. You're no longer tangled in the noise. You're reading the melody. I've seen traders who make 5 trades a month and outperform those who make 50. Why? Because they understand timing. They wait for confirmation, for strength, for that unmistakable signal that tells them the market is ready. They're not trying to win every battle. They're waiting to win the war. That's what doing nothing really means. Refusing to fight battles that don't matter. And think about this. Doing nothing also prevents revenge trading. After a bad trade, your ego demands redemption. You want to get even with the market. But the market doesn't even know you exist. The moment you try to fight it, you're already losing. The only way to regain control is to step back, breathe, and let time reset your judgment. That's what the disciplined trader does. He knows when to retreat, when to watch, when to wait. Sometimes, the best trades you'll ever make are the ones you never take. Those missed trades, those moments of hesitation that kept you from jumping into something unclear, they save your account. And every dollar you don't lose is a dollar that can work for you later. The market doesn't just reward action, it rewards survival. The irony is, the traders who learn to do nothing end up making more over time. Because they're trading when probability, timing, and emotion all align. They're not scattering their capital across random setups, they're concentrating it in moments of clarity. That's when trading becomes less of a struggle and more of a rhythm. Waiting, watching, striking only when it counts. So the next time the market's quiet and you feel that urge to act just for the sake of doing something, ask yourself, is this trade necessary? Or is it just noise? Because in this game, the silence between trades is where mastery lives. Doing nothing isn't a sign of weakness, it's the proof of control. Simplicity in charts leads to clarity in judgment. That's a truth most traders resist until the market teaches it to them. When you first step into trading, it feels like more information should make you more accurate. You load your screen with indicators, moving averages, oscillators, and fancy tools. The screen starts to look like a rainbow of predictions. Every signal seems to point in a different direction, and before long, your confidence disappears under all that noise. But the experienced trader knows something the beginner doesn't. The market doesn't reward complication. It rewards clarity. The simpler your chart, the clearer your decisions. Think about it. The price is already the sum of everything. Every opinion, every emotion, every trade made by every participant is reflected in that one moving line. You don't need 100 indicators to tell you what price is already screaming. But traders love to hide behind indicators because they fear the truth that price shows. Price doesn't lie, but it does make you face your own mistakes. And that's what most traders want to avoid. Have you ever noticed how easy it is to convince yourself that an indicator confirms your opinion? You see a setup you like, then scroll through your tools until one of them agrees with you. That's not analysis, that's self-deception. And the market punishes self-deception faster than anything else. Simplicity strips that away. When you trade from a clean chart, maybe just price and volume, you can't hide from what's happening. You're forced to read the market as it is, not as you wish it to be. Clarity of judgment starts with visual clarity. A clean chart gives you space to think. You can see trends forming, levels building, reactions to news, patterns of behavior. The more clutter you add, the less your eyes can process. Your brain starts reacting to signals instead of context. The professional trader isn't looking for constant signals, he's looking for confirmation in the story the price is telling. And that story unfolds one candle at a time. In my early years, I made the same mistake everyone does. I tried to find the perfect formula. I thought if I could just combine enough indicators, I'd get certainty. But the market doesn't deal in certainty, it deals in probabilities. Every trade you take is a calculated risk, not a guarantee. So why complicate it? The market moves up, down, or sideways. That's all it can do. And if you can't make sense of it with price alone, no indicator is going to save you. Ask yourself, how many times have you ignored a clear price trend because an indicator said it was overbought? How often did you miss a good trade because the chart looked too messy to trust your instincts? That's what complexity does. It creates hesitation. And hesitation in trading costs more than any losing trade because it eats away at your confidence. When you simplify your charts, something changes in your mindset. You start to see the market as a living thing, breathing, pulsing, reacting. You notice how it behaves at key levels, how it traps traders before reversing, how it builds pressure before breaking out. You start thinking like a tape reader instead of an indicator follower. And that's when you begin to trade with flow instead of friction. This ties directly to what we talked about in the previous video, no indicators. No stress, just profits. That whole idea wasn't about rejecting tools for the sake of it. It was about freeing your judgment from noise. When your screen is simple, your mind is calm. You can read price action with focus, spot opportunity with clarity, and most importantly, recognize danger early. Simplicity is a form of discipline. It forces you to confront reality directly, without filters or excuses. The reason simplicity works is that it aligns with how the market really moves. The market is driven by human behavior, fear, greed, uncertainty. These emotions leave patterns on the chart, and those patterns repeat. That's why price and volume are enough. Volume shows conviction. Price shows direction. Together, they tell you who's in control, buyers or sellers. Everything else is a translation of that same information, just with more lag and less honesty. The traders who rely on complicated systems often end up trapped by them. When the market changes its rhythm, their indicators fall out of sync. They start tweaking parameters, chasing signals second, guessing themselves. But the trader who reads price doesn't need to adjust much. He adjusts himself. He adapts to what the market is doing now, not what it did last week. Simplicity keeps you flexible, and flexibility keeps you alive. Have you ever watched how the market reacts when it approaches a strong resistance or support level? You'll see hesitation, smaller candles, lighter volume, and then a breakout or a rejection. You don't need a single indicator to spot that. All you need is focus and patience. That's clarity. That's what a simple chart gives you. Direct access to the truth of what's happening. Complex charts feed the illusion of control. Simple charts force you to trust judgment. And judgment, when developed through experience, is the trader's real weapon. Simplicity doesn't make trading easy, it makes it honest. You'll still lose trades, but you'll understand why you lost them. You won't be blaming lagging tools or false signals. You'll be learning from the market itself. Simplicity also preserves your emotional capital. When your chart is cluttered, your mind is cluttered. You're constantly reacting to crosses, divergences, signals. You start feeling pressure to act on every change. But with a clean chart, you're calm. You wait for confirmation. You let the trade come to you instead of chasing it. That patience, born from simplicity, becomes your edge. When traders strip away the noise and focus on price, something remarkable happens. They begin to see the same setups repeat over and over again. Breakout patterns, pullbacks, consolidations, reversals. The patterns never change, only the faces of the stocks do. The simpler your screen, the faster you recognize them. That recognition builds confidence, and confidence leads to consistency. So when you look at your chart next time, ask yourself, is all this clutter helping me, or is it hiding the truth? Can I really see the story price is telling? Because in trading, the less you need to make a decision, the sharper your judgment becomes. Respect your stops. They're your insurance, not your enemy. Every trader says they understand this, but very few live by it. You can tell a lot about a trader by how they treat their stop loss. Some treat it like a suggestion, others like a wall they refuse to cross, and some ignore it completely. But here's the truth. The stop loss isn't there to limit your freedom. It's there to protect your survival. The moment you break that rule, the market will remind you, often in ways you'll never forget. A stop loss isn't a sign of weakness or doubt. It's a declaration of discipline. It's you saying, this is how much I'm willing to risk to find out if I'm right. Every trade you take carries uncertainty. You can analyze the chart perfectly, time your entry flawlessly, and still, the market might go against you. That's just how the game works. A stop doesn't mean you're wrong. It means you're wise enough to recognize when a trade has stopped working. Have you ever noticed how liberating it feels when you close a losing position and immediately feel the weight lift off your chest? That's your capital and your clarity being restored. The traders who refuse to respect their stops don't last. They might get lucky for a while, maybe even for months. But luck always runs out. The market has a way of finding your weak spot and pressing on it until you break. One trade turns into a small loss turns into a bigger one, and before long, you're praying for a miracle. But the market doesn't deal in miracles, it deals in math. The moment your loss gets too big, your options disappear. That's why the stop exists. To protect you from yourself. Have you ever thought about why insurance exists? You pay for it hoping you'll never need it. It's not meant to make you money, it's meant to prevent disaster. A stop loss is the same thing. You might never hit it on your best trades, but when you do, you'll be grateful it's there. The irony is that most traders hate stops because they make losses real. Until you hit your stop, you can still pretend the trade might come back. But that kind of thinking destroys traders. The professionals don't take stops personally. They take them as a sign the market is telling them to step aside. In my early trading days, I broke my own stops more times than I care to admit. I'd move them, just a little lower, thinking I was giving the stock room to breathe. Every time, I ended up regretting it. The market doesn't care about your breathing room. When a trade moves against you, it's telling you something important. Your timing is off, your read is wrong, or momentum has shifted. The stop is your way of respecting that message. It's not about surrender, it's about survival.